Hey guys, since I have a pretty popular video, popular from my channel, that is called Is Buying Property at the Bahamas Worth It? And considering I'm currently in the Philippines and I see a lot of real estate, and considering it is not a great day for scuba diving, snorkeling, or any other activity, I decided to talk about is buying an investment property in the Philippines worth it? With the key of being an investment property, not a property that is vacation property. So you've probably seen those expat videos online that they're living their best life, and yeah, it's pretty amazing to come here on vacation, even if it's for a prolonged period of time like I did last year and this year. However, this is for enjoyment and vacation. Is it worth it actually buying a property here? Not only properties, they actually have islands for sale. So in this video, we're going to tackle the pros and cons of buying a property in the Philippines and in the US, and we're going to see what type of money are involved into doing both and what type of tax implications. Pros of buying properties in the Philippines. All right, let's start with the good stuff. Here's why investing in real estate in the Philippines might be a smart move. Lower property prices. Well, buying a property here is like buying a used Honda compared to a brand new Tesla. It's way more affordable. You can buy a condo in Metro Manila, which is the capital, for $80,000 to $150,000, where in some cities in the US that won't even get you a parking spot. Beachfront properties here are also available for a fraction of beachfront properties in California or Florida. High rental demand. Because this is a super prime destination for expats and vacationers, if you run a midterm or short-term Airbnb style property, it's just gonna get filled pretty much all the time. Manila, Cebu, or Boracay, where we're at right now, attract a lot of expats, retirees, and digital nomads. And even the monthly rentals, if you run it for a long-term rental, is pretty competitive comparing what price you pay and what rent you get compared to similar in the US. The tax situation. So compared to the US, the Filipino government is less aggressive into the taxation compared to the US. There is no property tax to certain condos under 50 square meters or around 500 square feet. So smaller properties. And rental income is taxed at 8% flat compared to the US, where it's taxed at 10 to 37%. But that is with an asterisk. So the big but here that I want to mention is that in the US, we have 27.5-year paper loss or paper depreciation, where if you buy here, you cannot get that. So even if you're taxed 10 to 37% when the property is fully depreciated, by the time it's fully depreciated, we have something else in the US called 1031 exchange. So if you really don't want to do 1031 exchange, then you're going to be slapped with a tax. But for 27.5 years, most likely you're going to pay almost zero in taxes. So I think this is kind of a wash. Cost of living and property maintenance is lower. Well, obviously because the standard of living here is cheaper, so hiring management, maintenance, even security will be cheaper than the US. But again, that comes at the cost of making less money per month on average than the US. Like Airbnb Florida and California on the beach, it's not $40. Like I'm staying right now on the beach and it's $40 a night, and in Florida or California, you're not gonna find that. But also, that property is not worth $7 million here. I think you get the point. Monthly condo fees or HOA fees are $40 to $150, where in the US you get 400 plus. Foreigners can own condos. You can own condos in the Philippines as a foreigner. However, you cannot own land. So that's something to think about. Maybe that's why the law says condos, not houses, because condo, you do not own the land. You own what's in between the walls. And also you can own as a foreigner up to 40% of the condo development. Cons of buying property in the Philippines. All right, not everything here is sunshine and mangoes. Here's what you need to watch out for. Foreigners can't own land. Like I've already said in the previous section, you cannot own the land, which might be a problem compared to the US, where you own the land. There's a loophole around it. You need a Filipino partner, which is doable. Yeah, case in point. There's a way around it. You need a limited partnership, a Filipino partner, or a long-term lease to do that. But check with a local attorney. Financing is a challenge. So in the US, it's easy to get a mortgage, but here, getting anything financed in terms of mortgage as a foreigner is pretty much as challenging as making your Tinder date pay the bill. Most banks, if not all, will not lend to foreigners, so you need to pay cash. which, to be honest, if you don't leverage real estate, it doesn't make much sense. Or, of course, you can get a private lender for a higher rate, but that kind of defeats the purpose of leveraging real estate with low interest rate and so on and so forth. Property appreciation is slower. Unlike the US, where properties have been skyrocketed the last few years, here the appreciation is way slower. Although in Manila, they've been up a lot the last few years, it is not anything compared to the US. Property taxes are less, but closing costs are a lot more. The government gives you a break on taxes, but it makes up for it when you sell and buy. 6% capital gains tax when selling a property, 1.5% to 3% transfer tax. Closing costs can add up to 5 to 10% on the purchase price. Bureaucracy and red tape. All right, title is not like in the US, guys. Things can take months here to clear title. And we all know that legal loopholes and corruption exist here. And another con that I see is in countries like that, like Colombia, Venezuela, here in the Philippines, the government is not really strong and structured like in the US or the UK or the Western countries. So today you have a property and tomorrow you don't. So final verdict. So is it worth it buying a property in the Philippines? Well, I hate to say it, but it really depends. If you're looking for affordability, rental income, and chill lifestyle, then yes. But again, that's going to borderline to not an investment probably, because if you want chill lifestyle, that means you're going to come here and visit here and you're going to use the property, not as an investment 100%, but to come on vacation for a couple weeks or a month out of the year, which is fine. You may do the same thing with Airbnb in the States. But I want you to differentiate the pleasure from business, if possible. Now, there's a gray line in between them where you can use it 11 months out of the year as an Airbnb and come here for a month, which is totally fine. But don't make that purchase only with that 1 month of vacation in mind, because you can always come here for 1 month without buying a property. And if you're looking for fast appreciation, better legal structure, owning the land under your property in case if it's not a condo, and concrete property rights, then the US market is for you. Well, that wraps it for this video. Thank you all for watching. If you enjoyed that content, you know what to do. Hit like, sub, and leave me a comment down below. Would you invest in the Philippines or rather invest in the United States of America? And as usual, the goal is not to look rich, but to be rich. Peace.